Okay, we are in the heart of earnings season, and earnings played a role in the rebound on the S&P and NASDAQ today. Really, the drop in the 10-year Treasury note yield that was really the reason for the rally. Markets have been rattled by the 10-year rising all week, and it retreated. I talked about this in great length and detail in my last several updates earlier this week. But the Dow was down today. It was down much more. I believe it was over 300 points at the lows of the session. It rebounded down 0.33%. Didn't participate in the rally because it was dragged down. Again, the Dow's only 30 stocks, dragged down by IBM. IBM was down 6%. We have earnings. Honeywell was down over 5%. Boeing down over 1%. Struggled today. And again, talking about, new all-time highs for the S&P 500. If we form a divergence on the Awesome Oscillator, you'll see the charts. Well, the Dow already peaked. Sometimes it does peak ahead of the S&P 500. Other times they top out together. It's just something to pay attention to with the Dow being at major resistance. The S&P was up 0.21%, up 12.5 points. The NASDAQ was up 0.76%. They didn't close at the highs of the session, but they did close strong. NASDAQ had a decent rally. The Russell up 0.25%. VIX still holding above 18. It's at 19, and it was down 0.88%. Help NASDAQ was Tesla. I talked about this yesterday. The Tesla earnings, they were up 9% when I made the video yesterday after hours. Tesla rose by 20%. Best day in over a decade. Elon Musk's 2025 growth projection really helped NASDAQ today. Really helped the market, even more than Tesla, was the decline in the 10-year Treasury note yield, which I've been talking about all week. 10-year yield dropped by about 1% today. And again, we got that doji yesterday, and I told you to be watching for a reversal. Again, the doji could be a continuation or a reversal pattern, but we're up at the levels, or near them here, where we were when we began to see the NASDAQ 100 peak back in July. So again, something to watch. We're also at that 200 period. I told you to be watching to see if we start pushing below it. So what I'm going to be watching is, do we now have a peak, or do we just have a pullback? And if we have a peak, this negative correlation again for the moment, where we've seen the yield go higher, but the S&P has gone lower. So that negative correlation is back between the 10-year and the S&P. And we had that for a very long time, but I told you eventually Fed starts lowering rates, it's going to go back to a positive correlation, which it has been. We saw the Fed cut rates September, and the 10-year yield soared. We had the private rally that I've been predicting, and we had, again, this positive correlation. Actually, I went too far with this because up to here, and then we had this yield continue rising, but yet the S&P pulled back. So it went back to a short-term negative correlation after being positive, a positive correlation here. They're both moving higher. A rally after the Fed pivot, a Fed pivot rally, which I've been predicting long before the Fed ever cut. That would finish creating a topping process. S&P would move to new all-time highs. Again, that would likely set up a lower high, but I told you we'd rally up to the 20,400 area. So again, if this starts going lower, if we do have a peak and we start reversing or topping process here, maybe go a little higher and then go back down, whatever. If we see a top here, either with the doji or shortly thereafter, then I'd be looking for the S&P, probably try to get a bump here initially, but then eventually join the 10-year if it starts dropping. Again, I believe that they're moving back to a long-term positive correlation. People saying, the Fed made mistakes cutting too early. Remember when they were telling us the Fed was making a mistake? They were cutting too late, that they should have cut long ago. Remember that? Now they're saying, they cut too early. A lot of them made a policy mistake. The Fed's going to keep cutting. It's probably going to be at a slower pace at the quarter percent level. They'll be cutting at 25 basis points, probably at the next couple of meetings. I told you that could eventually factor. You have people going, they're not fast enough. You got the tug of war going on. You got one group saying they're not fast enough. Then you have other people going, shouldn't have cut. They're going to have to raise, whatever. They're going to end up cutting because recession is coming. We'll begin to price that in, and the Fed is going to begin cutting, a rate cutting campaign to combat that. This is what drove the market today, is you have this downturn off of the highs from yesterday. And again, this has been rattling the market all week long. Again, slightly lower today. Again, hovering still above the deep period moving average of 50, is still above the 200, telling us this rally is going to end up failing. Just consolidating here in this range 18 to 20, which again, you start getting up to these levels and then getting past the 18 to 20 level. That's when the volatility returns. Bollinger Bands are tightening up like we had back over here. So again, watching this closely. Stochastic did turn back up today. MACD still hovering just above that center line. Is it going to firm up here immediately? And we start seeing, a breakdown of the trend line and the back test on the S&P. We buy a little bit more time and form divergences on the awesome oscillators in the daily time frame. Talking about in this video, and I have been talking about, along with another divergence, a triple divergence forming on the RSI on the S&P in the 60-minute time frame. Quickly, we got that 50 above the 200, and again, that's when bad things start happening. We had that happen in 2022, and we had a 27.5% sell-off. Before that, we had happened during the pandemic. We had a 35% sell-off. 19, 18, 2015 and 16, 2011, flash crash, and again, on and on. And then during the bear market back here in 2007. So again, this is telling us, hey, something's wrong. Volatility is going to return. The VIX relative to the S&P is diverging with the S&P, and that's the same thing. That's what happened at the 2007 top over here. That's what happened at major corrections during the bull market. Just quickly, we had that 9 count. The 8 bar is the high of the count so far. We're watching, and that formed the divergence between on the NASDAQ, on the S&P, and it diverged with NASDAQ. Going to be watching to see if we push on up into that level again, or if we start breaking down. Again, the 9 count is warning us of price exhaustion, and again, already had it on the monthly, we already had it on the weekly, and again, we're going a little bit higher. Just create a turning point, or we go a little bit higher and then create a turning point, much like what we had over here. We got it, went a little bit higher, and then began the turn. Here we got it, went a little bit higher, and got the turn. Do we see something like that, or does this create a turn immediately? With NASDAQ at the July peak, it created a turn immediately. But again, just be paying attention, because we have the 9 counts on those long-term charts. Listen carefully. In this video, I'm talking about, are we back testing the trend line, or are we going to get above the broken trend line that we got on the S&P 500? Do we buy a little bit more time, or do we start a sell-off? Do signals start going negative? We start seeing trend signals start turning bearish, breaking down. Momentum start turning back to bullish, and we form a divergence on the awesome oscillator. So I'll be watching about possible shift in momentum or a reversal starting. We had some warning signs. I talked about that at great length and detail. We still have the momentum line turning down. We rally back up. We're getting this red arrow. So again, there's still risk here that, again, the top could be in. But we need to see trend signals begin to turn bearish. The daily time frame, we have the momentum and the trend signals bearish, swing trend signals here in the intraday time frame. I told you if it turns back to bullish, then again, we still might not turn these signals to bearish, but possibly form that divergence on the awesome oscillator. It can play on either way. Watching to see if the trend signals are going to start turning bearish, taking out the cloud, taking out the blue line. Start seeing the ribbon roll over, start seeing prices drop below the green line right here, representing the short-term swing move. So do I start seeing bearish things happen with the momentum shift, or does S&P repair itself for the short term? Crossing out the 20-period moving average, not seen here. With NASDAQ, we've seen momentum shift. Now with the momentum line and the little arrow and some of these X's, we haven't seen the little topping signal with the T we did with the S&P. But again, are we going to start going negative with momentum? Are we going to start breaking down and seeing trend signals turn bearish? So this is what I'm watching for. Momentum turn bearish. This is either a pullback that we're going sideways, or the start of a downtrend. Signals slip back to bullish, then we're going sideways. The process isn't done yet, and so we'll be watching the NASDAQ and S&P. But we're seeing momentum and shift intraday. Does that last? Or is it just something like over here with our triangle, and we end up turning back to bullish on the S&P? Or is it something like this where we start the downtrend? We'll be watching to see what happens here. Again, does it flip the daily signals trend with the daily signals to bearish. See momentum and trend signals in the swing trend signals in the intraday time frame. We've seen them turn to bearish. Do they remain that way? Do we see some divergences develop on indicators completed topping process? So I'm looking for clues, but we need more evidence. Here with the cloud, we came back to support. We bounced off of it, got a bottoming tail there. Again, do we see a divergence develop on intraday charts here? We start taking out this level of our low, our previous low right here. Then again, you're going to be starting to see signals turn bearish, trending signals. This is looking at more of a short-term trend rather than just a swing move. It has not turned bearish yet. So if it does, then again, I'll be watching. When we peek back over in July, we bounced here as well. We got a lower high, and then we got a bigger sell-off. Do we bounce here and get a divergence or a lower high and then get a bigger sell-off? So I'll be watching to see what happens. Back test a broken trend line on the S&P and resume the decline, or do we get above the broken trend line? Is what I've been talking about in my last two updates here today and yesterday. Yesterday when we broke it. And intraday signals remain bearish. Do they remain that way? Just back testing. So I'll be watching to see if these try to flip back to bullish or if they remain bearish and we start resuming the decline, taking out this low. Same thing here, S&P, intraday. Again, we've seen the signals momentum flip and then gapping lower on Wednesday. We saw the swing trend signals turn bearish here today. Momentum, the daily time frame, but the trend signals are still bullish daily time frame. So are we back testing or do we still buy more time? We'll be watching to see how it unfolds. Again, we had a divergence here. Do we get another reference point of a divergence, something like what we had over here, something like maybe over here, or is that all she wrote? So we're looking for clues. Need more evidence if a reversal is starting. There is not enough evidence of it, even though I believe the time is short. If we get evidence of it, possible we buy a little bit more time. As we're paying attention to, again, tensions in the Middle East, that could rattle markets at any time. Earnings season, rather than having a sell-off ahead of the election, we've had this rally back up with the Fed pivot, sell-off after the election. Could be. A big sell-off on Wednesday. We had a gap and go on the intraday charts. We gapped lower and we just kept going. Dropping back, gapping down below the 200 period, and then we came back up here, and we had a rebound towards the end of the session. Well, during today's session, we gapped higher, and then we went back and we filled that gap right there. We filled the gap, and then got a higher low and went back up, and we hit this trend line right here to form an inverse head and shoulders pattern, a little inverse head and shoulders pattern on the 5-minute chart, and that broke out late in the day there towards the very end of the session, and we called right there at the 200 period moving average. So again, I'm watching the gap up here from this gap down, watching to see this if this gap attempts to get filled maybe Friday, if we can go up there to 58.51, and then I'll be watching, do we go back and we challenge the previous highs? We can form that divergence on the awesome oscillator if we can get back above. But if we go back and fill this gap right here, do we get back above that broken trend line in the daily time frame? 58.51, pay attention to that. And we broke the trend line. I told you we broke the trend line, but we need to see a push below the 20 period, and we need to see a confirmation of that breakdown and a follow through. We actually got a little bottoming tail at the 20 period moving average yesterday. Which again is what I'm watching is, do we get back above that trend line? Do we get back above the 10 period, the red line right there? And if you do see that happen, then there's a shot for trying to get a larger divergence. We had a little one here on the RSI, could see a larger divergence develop. We kind of saw that over here. Can get it on the awesome oscillator as well, but the S&P would have to get a close back above this broken trend line. Now here I've excluded the shadow. If we include the shadow, then we're still above that level. So again, watching both of these trend lines. At the MACD rollover, we had really a Class B divergence where we got almost two equal peaks, and we have this divergence, and that's given us the sell-off back to the 20 period moving average. So what happens here? Do we continue the slide and resume the decline? We get back above that level and come back up here. Do we have a a possible little bull flag right here that gives us a push back above this trend line, and then this trend line then becomes key support. And if we do we again attempt to come back up to this trend line right here, and again get a rally back up into this level and then top out or move towards it. So some trend lines I'm watching. I'm watching the red line here, including the shadow, the black line excluding it, and then the upper boundary here of the rising wedge. Again, watching that. If the peak is in, we need to see a confirmation of fall through. We did not get that today. We actually, again, higher, went back, again, got a higher low on that 5-minute chart, tested our 20 period again, and bounced off of it. So that's where we're at right now. Here in the daily time frame, bouncing off the 20 period moving average after breaking the trend line. So the question now is, are we in back test mode, back testing the trend line and going to resume the decline, or are we going to get above this level and try to form a divergence? I believe we're in a topping process. I told you I thought the S&P would move to new all-time highs, even when, again, I was predicting this divergence back over here and predicting a decline on both NASDAQ and S&P. We had the gap. Did major technical damage on NASDAQ, and I told you, even though I was expecting a decline, I told you that eventually NASDAQ would go back up to fill the gap after the sell-off, and S&P would likely move to a new high. After we rallied up here, and I talked about this sell-off not reaching a new high right there, even though I predicted that we would go back down, I told you over here with the jobs report, we would see bottom form the following week with the inflation data. That did happen, the bullish inside day, and then the CPI rally. The PPI rally followed right there, and again, you got that reversal, and we resumed the advance. Then we did move to the new high, and I told you I don't think it's done yet, because even though we formed divergences on indicators, the intraday charts right here, I told you on the RSI and indicators, I told you again, NASDAQ has to fill that gap. It hadn't done it yet. And then we developed this triangle. I told you I thought this was a triangle. I thought this level of support was going to hold. I didn't think we'd break down, but we'd break up. And we did. So again, been predicting new all-time highs for the S&P, predicting NASDAQ would go back and fill the gap. We had that just under 2 weeks ago, looking for the topping process. Momentum indicators turned bearish. This pullback, trending signals are still hanging in there as we're bouncing off the 20 period moving average. Again, I still think there's a possibility of a divergence developing. I'm looking for a topping process, predicting new all-time highs since the sell-off for the S&P 500. And again, that gap fill, NASDAQ, that's now happened, forming this rising wedge. So now I'm looking for a topping process as we're at major resistance levels in the weekly. Talking about another reference point of a divergence on the S&P forming. We already had one right here. Okay, we had one right there. Do you see that? I talked about that divergence setting up before it happened. Talking about another divergence forming after we had this one over here that gave us our sideways correction with the triangle. If we get back above the broken trend line, we could still see, again, another reference point, a triple divergence develop with this RSI and MACD. We saw the MACD start to turn up, but we got a lower high and then we turned back down. If it's trying to turn up now. If it turns back up, still may see it here. And again, in the heart of earnings season this week, next week, be getting a lot of S&P companies next week. We're going to start seeing some of the Wall Street darlings earnings reports next week. Watching that. Again, we're watching tensions in the Middle East. Real fast about tensions in the Middle East. There was that leak recently, a leak, classified information regarding Israel's strike on Iran. There's been delay because of that as well. They're having to make some changes to their strategy. Again, Israeli officials have said that they were going to strike before the election. We'll see if that happens, which is 12 days away or so here. Now here's the S&P 500. Again, we've seen momentum shift briefly here. Will it evolve into a bigger sell-off, just backtesting the broken trend line of the rising wedge? Or again, do we see signals revert back to bullish? I've talked about the possibility of a bullish or a bearish divergence developing here if we start seeing some green. If we can extend the rally into next week, then we very well could see that happen. A few days of green bars, and then form a divergence. We'd have to see my signals, the momentum signals, turn back to bullish if that happens here on the S&P daily chart. Could it happen? Yes. Does it have to happen? No. And the other possibility is we just see this start going negative and we start taking out the 20, start moving down to the 50 and resume the decline. Evidence of a reversal when we start breaking down and seeing trend signals really start turning bearish at that point. See momentum shift. It's got to spill over into the trend signals, and then we've got to see that spill over into the weekly time frame if we are to sell off right here, right now. I talked about it being something like this over here, and if we start to sell off, it could be something like this over here. Again, I don't want to rule this out. I think it's still a strong possibility. We're still trying to bounce off the 20-period moving average for 2 sessions in a row now. If we see the signal turn right back to bullish like over here, then again, watching for a new high and a divergence to likely develop in the awesome oscillator. Have to happen? No. But I'm telling you, again, different scenarios. One scenario is we could just break down right now. If we start seeing happen, we'll see signals begin to all turn, trend signals all begin to turn bearish. Flip momentum signals back to bullish, then this divergence could be in play. I think it's still a strong possibility, as I keep saying. Bearish reversal of conditions is telling us we're either going sideways, like we did over here, sideways, or we're going down. That's what it's telling us. So right now, we got to figure out which one that is. And if we're going sideways, the odds greatly favor we're going to set up a divergence. The time is short because of the divergences in the weekly time frame. Now again, we are down for the week. We'll see if we close positive for the week, if we get a rally on Friday, or the yields continue to drop out the market for the short term, or do we end up testing the trend line of the rising wedge and then resuming the decline? Again, we have this triple bearish divergence that's in play here. So many indicators like the MACD and the awesome oscillators. I've talked about at great length and detail. Been listening, I've been predicting new all-time highs and a rally. NASDAQ can fill the gap, and that has created this divergence. The last one gave us this sell-off. I told you we would see on the NASDAQ and S&P move to new all-time highs, and that's giving us this next reference point of a divergence. Eventually, we'll get the red bars. If we've already peaked and we've now started to turn down, then we could see that happen sooner rather than later. If we have a divergence in the daily time frame on the awesome oscillator, we buy a little bit more time. Just looking at mathematically based indicators to try to make educated decisions on what is likely going to be happening next. And again, that's why I talk about probability. Talked about the guideline for the first rate cuts in 2001 and 2007. Again, it's about probability. It's a guideline. We can go shorter, we can go longer, a little bit longer. Again, you get people coming to the false conclusion, oh, these divergences, they're not going to play out. Human emotion is absolutely amazing. Same thing here on the NASDAQ daily chart. Again, we've got the momentum. We're trying to bounce off the 20 period. We had dipped below it with the Wednesday sell-off. We gapped above it Thursday, and we're testing 20 period here as well. So again, if we push a little higher, we don't have to. Again, right now, there is a divergence in this most recent price action between the S&P and the NASDAQ. That may stand if the sell signal, remains and momentum, flipping trend signals to bearish. If we see this turn back up, still might form a divergence in this most recent price action, but still not be able to get back above the July 10th high. Again, my personal belief is that was the peak. I think that we'll see that divergence with a lower high setting up on NASDAQ. S&P has made new all-time highs, as I've been predicted. Again, as a sell-off, when we gap down, I said eventually we're going to come back and fill that gap. NASDAQ and S&P is going to go make a new all-time high. NASDAQ is going to come back and fill that gap in an overall topping process. I'll be watching. Does the signal remain bearish, start losing these 20-period moving averages and doing technical damage, or do we see signals flip back to bullish? Over here, flip bearish, briefly bearish, and then it turned right back to bullish. And we got this divergence right here that I've talked about. Some of the indicators. Do we get a divergence forming in this most recent price action here? S&P formed that inverse head and shoulders, and it broke out of it, and it stalled at the 200. Again, I'm watching this gap at 58.51. NASDAQ did get above the 200 in the 5-minute time frame. 50 here is still below the 200. Let's look at NASDAQ real fast. Now, again, we gapped higher. We didn't go back and fill the gap. S&P did. We just pulled back and then to the 50 here on the 5-minute chart, and then we tried to get above that 200 a couple of times, and S&P got that inverse head and shoulders. We almost formed a triangle here and broke out of it, or again a inverse head and shoulders that is slanting upward rather than downward on the S&P. That could be that right shoulder. That again, patterns there in the 5-minute time frame, but we did get the 50 back above the 200. At the end of the session, price did close above the 200 here. Our 200 period moving average here on the 5-minute chart. You got the gap fill up here, 20,383 if we round up. So again, we're going to be watching these gaps. Again, this was the gap lower from Wednesday, so we're going to be watching these gaps. And if we can clear them, then we'll be watching, can we move to a new high? Can we move to a new recent high on NASDAQ, but still not move above the July peak? Does the S&P move up and get a divergence on that 60-minute chart I talked about? Let's look at the NASDAQ. Talked about another reference point of a divergence here on the S&P 500, possibly a triple divergence developing there. Similar here, or again, you could just form a brand new divergence right here if we try to go up here, but more than likely, I think we'd see a lower peak, lower than this one right here, and get a divergence in this most recent price action right here. So this is what I'm watching, and right here we have this trend line right here at the gap fill. So again, do we just come up there and get another lower high and fill the gap, and then just turn off this trend line right here from the peak here and the peak here, and just fill the gap, and then that's it, and we can't move above this peak, which was our gap fill from just under 2 weeks ago at the 20,400 area. Where do we try to form a divergence right here, again moving above this high, and we just move slightly, maybe push up into this level, trend line from back over here, which is better seen on the daily chart, but let me show you that. But we're trying to firm up. Again, I talked about trying to form a divergence with this move right here. We firmed up, but then we roll back over. Now we're trying to do it again on the MACD, and the RSI is trying to move off of extremes, and we're bouncing up the 200 period moving average right there. So again, gapping higher. We didn't fill the gap. S&P did. We're going to be watching, do we come up here, get a lower high, or do we try to go slightly higher above this peak, and again form a top around this gap fill area, which is what I've been talking about. And this divergence over here helped me call this top, along with the 9 count over here. We got a 13 count. We may push a little bit higher. We did, but again, the top still could be under construction. Even if we rally, we still may not exceed the July peak here. Let me show you this. And again, we've got these rising wedge patterns, a couple of them on the daily chart. And here it is on the daily chart. Again, I've talked about this smaller pattern right here, again, that we've broken down from, and we could just be in backtest mode. We did get a bullish inside day. Had one over here, but it never really got confirmed and a follow through. We've got a bullish inside day here. So does that get us back above this trend line, the red broken trend line there? But here we've broken this trend line, and again trying to bounce off that 20. I have this large, and again we could see this trend line reach the upper red one connecting these two levels, or if we connect this peak and this peak, again this upper boundary, we might have this larger rising wedge in play. We didn't reach this level. Watching to see if we do. The 50 period is right underneath it, but